So wanted your opinion on how the ITC's numbers look. What's your take on that?
More or less in line with expectations, slightly better than expectations. Uh, you ex- uh, you assume the hotel business would do badly. It has done badly. Agro has done better than expected. FMCG plus cigarettes have done about as well as expected. Paper is in an upcycle where ITC as a big player in paper boards has done pretty well. Um and it seems to have managed its supply chain issues reasonably well. There are issues. This is generic. There are issues about inflation, which is hitting input prices, but it seems to have managed at least to keep the supply chain intact, and that is given what was happening in April and May. That is uh, a pretty good indication that all those years of setting up a good back end and a good supply chain and building relationships, etc., each of all, etc., has worked. It seems to have worked.
Talking
So
about the food segment, the FMCG ware, with inflation likely to hover around the current levels, which are really above the RBI's comfort zone as well. Do you think that ITC is in for a tough time ahead, or will it be able to pass on the higher cost to consumers?
I think every FMCG will have to try to pass on the higher costs if they can, because there is a huge problem across the board. I mean, this is not a corporate problem. It's really for policymakers to handle. Otherwise, yes, of course, there's a certain point at which inflation will start affecting the whole FMCG sector. But also historically, we have seen that it is one of the few areas where mm, consumers basically it's one of the last areas where people start cutting down when there is an inflationary situation. So
Okay, there have been talks as well, Devanshu, that the company should actually look at now separating the cigarette business from the rest of the verticals it has. Do you think it makes sense for ITC to look at this option?
spinning off, well, yeah, from an analyst's point of view, it certainly makes sense because you have several somewhat disparate businesses, and making a sum of the parts evaluation is always a difficult exercise. And practically speaking, we've seen that where conglomerates have split up, the separate companies have tended to get higher valuations than the aggregated whole. So in that sense, it makes sense. Whether it makes sense for them organizationally, I don't know, because uh, okay, mm, mm, the hotels business is, let us say, a completely different game from the others, but agros, cigarettes plus other FMCGs and paper broadly feed into the same sector. You're talking about cash crops. You're talking about building relationships with a back end and farmers and your supply chain. And I'm not sure that those businesses couldn't stay together. Certainly, in terms of management, I would say that the same person, same people who are handling the cigarettes business, at least the back end, not necessarily the marketing, would be also very comfortably handling the rest of the agro and FMCG. And similarly, the people who are handling the cigarette marketing would be okay handling the food and hygiene part of the business as well. But in terms of valuations, I'm sure it would get at least higher valuations for separate companies.
Okay. So the hotel business, as you rightly said, it's not doing well given the pandemic. The inflation is biting into the FMCG segment. Do you think the overall financial performance of the company in the quarters ahead could remain subdued? At the top level, at the top line level, at the bottom line level, and even at the operational level.
Part of this is third wave, and we don't know what the impact of the third wave will be. I assume, from what everyone is saying, the third wave will should start in a couple of weeks, or maybe 2-3
Sure.
weeks.
Sure.
We don't know what the impact of that will be. And clearly, if you go through another cycle of lockdowns and the behavioral changes which have occurred because of the last year, people are reluctant to go out. That will, I think, the hotel business hospitality will continue to struggle for a while. Mm, the other segments, again, looking at their performances in Q1 last year, that is in 2020, and Q1 this year, I think they have managed remarkably well in terms of sorting out, keeping the supply chain going, keeping distribution going, and I think you can reasonably expect uh, growth uh, at both at the top line and at the bottom line for the other businesses. For hotels, well, they took maybe more than 50% of the top line disappeared
Yes.
in the pandemic.
Yeah.
So there, you can take either a glass half full or glass half empty optimism or pessimism, depending on how you think the third wave will turn out. Because
Yeah. Yeah.
you could conceivably have a scenario where that business bounces back with big gains off a low base. You could
Correct.
also have a scenario where it continues to struggle, and I don't think anyone can really make
Predict
a.
that. Correct. Sure. In the past few days, the stock has actually done quite well, reaching up to crossing of 210 levels. So, what are the
Yes.
markets rewarding now? I mean, do they know something that the retail investors don't know?
Partly, I think what you got here is it's at these valuations, given that it has a pretty stable dividend record and it will continue because of the way the company is structured. It is a fairly decent dividend play. It's probably giving you more dividend as a percentage of price than you would get from an FD.
Correct.
It must be giving you about 5% or so in terms of dividend, which is uh,
Which is
fairly
quite
decent.
healthy.
Is quite healthy.
Yeah.
Valuations are low for an FMCG. It's running at about 20x or so. Most FMCGs get a higher valuation, and ITC in the past has always got a better valuation than in the last, let's say, 1.5 to 2 years. So, a lot of analysts have said that they have doing some of the part valuation exercises. You're talking about target prices which are in the 270 to
200-300 range.
280.
Yes. The 12
Yeah,
month target price. Correct.
a 12-month target price. So you're talking, something like 15-20% up from here. If
Easily. Yeah.
Yeah, so if you're looking at that, and if you are someone who's a conservative investor, and you're looking at the fact that maybe you'll get 4-5% dividend thrown in as well, you might go with the stock. One thing is that it's not likely to get hit very hard if there is a bear market, which is again something you have to take into account over here, because markets are at such elevated valuations that any little thing could result
Could
in
put them
a
down, correct. And we have the third
uh,
wave, the fear of the third wave looming, on top of
yes,
us.
yes. A lot of people are turning conservative because you made profits, you want to book some of your profits, and you've got your fingers crossed because you don't know whether the next quarter will be hit with third wave.
So,
We don't know.
stock-wise, is it still a good dividend play because the parent company BAT has asked for a higher chunk of dividend from the from ITC this time around. So, for investors who are not looking at a capital appreciation point of view, if that doesn't come by, still a good dividend play, you think?
I think it's a reasonable dividend play. Yeah, and you're talking in a scenario where your return from fixed income instruments has gone down to, in fact, in real terms, your return from fixed instruments is negative at the moment, given where inflation is going. So you might want to, you might decide that okay, we'll go with this 4%, 5%, which we're getting from this stock. And I think I don't know whether the management will push up dividend right now, but the other way of looking at it is that the company has a fair, I mean, it has a pretty strong balance sheet, and there is no particular expansion it can go through.
Correct.
So there is no reason as such why it wouldn't give money back to the
To the shareholders,
shareholders.
correct.
Yeah,
Absolutely.
so
Absolutely.
at 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 some level, that logic of being a fair dividend play holds. At least at current prices, I think it holds.
So, given where the inflation is, do you think that the entire FMCG pack is losing its charm, despite being a classic defensive play,
I
which
think
includes,
they're all.
I mean, most of the FMCG plays, be it ITC or HUL or Nestle, have massively underperformed the frontline indices, which is the Sensex and the Nifty in the past 1 year.
Yes, they've done. Pretty badly. Actually, in terms of the financials, they haven't done all that badly. But in certainly growth has been hit. Profitability seems to be okay
Okay.
so far.
Okay.
But yeah, your margins will certainly get affected given that you've got inflation running at 6, 8%, 12%. We don't know where exactly it is, and you've had value chains being affected also, both in the first and second wave. So by the time you reorganized after the first wave, you got your agro back end hit by the second wave. So in that sense, they have been under pressure, and ultimately growth in FMCG is dependent on per capita growth, which has probably been negative in the last year and a half. Again, you've got to take one thing into account. These are all mature companies with excellent distribution and marketing. There isn't too much in the way of improvements they can make over there. There are very few regions in the country where they don't have a footprint.
Correct.
So you're talking really about the fact that does the customer decide that he's going to cut back on his spending or not, and beyond the point, inflation will start impacting that, and I don't think you can. I don't think you can pass on the entire effect of
Okay.
inflation to your consumer.
Consumer.
Yeah, not in a scenario where per capita is hasn't
If you feel
really improved.
COVID pain. Yeah. Correct.
Yeah,
So, would you say that there are better bets available in the market as than FMCG plays, including RTC?
well, the commodity sector seems to have boomed because of the global move in metals, etc. And yeah, in that sense, there could be better plays. We have had areas like cement moving as well because of an assumption that, all right, the government will focus on infrastructure projects, so there
Correct.
will be offtake over there. You've had a somewhat speculative move in real estate
Yes.
because of the fact that the listed companies are gaining market share over the unorganized, smaller companies, and you're hoping that inventory will get mopped up. Mm, so yeah, there are, at least in the short term, I think you will find that other sectors tend to get more attention. The only thing with FMCG is that none of them are at they're at discount. The valuations are at discount to the overall market, which is an unusual situation, and none of them are likely to lose a lot if there is a deep correction.
Okay.
They will do better than the market if there is a deep correction. So in
Okay.
that sense, you could be looking at the conservative investor saying that fine, mm, I'll
I'll
take,
stick on to FMCG, including ITC. Okay.
yeah, yeah.
Thank you, Devansh.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.